The mystery nobody teaches you. Every nation on earth owes money. Rich nations, poor nations. Winners of wars, losers of wars, democracies, dictatorships. That alone should feel strange, because debt is supposed to be temporary, a bridge between now and later. Something you pay off. So here's the unsettling question we're not going to answer yet. If every country is in debt, who is everyone paying? Because when you follow the money closely enough, you discover something even more disturbing. There's a ledger most people never see. It doesn't appear in textbooks. It isn't debated during elections. And yet it quietly decides which nations rise, which fall, and which remain permanently trapped. This is the story of that invisible ledger, and how the global system was built so that debt never truly disappears. Setting the stage. Before debt ruled the world, to understand how we got here, we have to rewind to a time when debt was dangerous, not powerful. For most of human history, rulers feared debt. Kings who borrowed too much risked losing legitimacy, territory, or their throne. Debt was a weakness. Money itself was tangible. Gold, silver, coins you could weigh in your hand. If a government ran out of money, it couldn't simply invent more. The limits were physical. But that limitation was also a problem. Empires wanted to fight bigger wars, build larger states, control more land. And physical money, gold especially, was slow, scarce, and stubbornly finite. So governments began searching for a workaround. Not to eliminate limits, but to move them somewhere people wouldn't notice. Origins, the birth of the ledger. The first major shift came with state-backed banking. Instead of kings borrowing directly from citizens or rival rulers, governments began borrowing from institutions. Banks gained special privileges, legal protections, monopolies, and eventually, the power to create money through lending. Here's the key change, and it's subtle. When banks issued loans, they didn't lend existing money. They created new money as debt. This meant money and debt became inseparable. Every new unit of currency entered the system already owed back with interest. At first, this was manageable. Small systems, small numbers. But once governments realized they could fund wars, infrastructure, and expansion without immediate taxation, borrowing became irresistible. And then something crucial happened. Governments stopped being temporary borrowers and became permanent debtors. The rise, when debt became a feature, not a bug. By the 20th century, the system had matured. Central banks emerged, institutions designed to manage national currencies, control interest rates, and stabilize economies. Officially, they existed to prevent chaos. Unofficially, they institutionalized debt. The gold link was gradually weakened, then severed entirely. Money no longer represented a scarce resource. It represented promises. And promises could be expanded endlessly, as long as confidence held. Here's where the invisible ledger truly formed. Countries now issued government bonds. IOUs purchased by banks, funds, corporations, and even other governments. These bonds paid interest, making debt profitable. Debt stopped being a liability. It became an asset. And once debt becomes an asset, someone benefits from it never being fully repaid.
The breaking point when paying off debt became impossible at first. The system looked brilliant, economic growth rose, markets expanded. Governments financed massive projects, living standards improved. But beneath the surface, a quiet math problem was growing. Every unit of money was created as debt, but interest was not created alongside it, which meant total debt always grew faster than total money. To keep the system functioning, new debt had to be issued just to pay interest on old debt. This wasn't a temporary imbalance, it was structural. The moment governments tried to seriously reduce debt, economies slowed, markets panicked, and unemployment surged. So leaders learned a dangerous lesson. Paying off debt hurts more than accumulating it. From that point on, debt ceilings became political theater. Deficits became normal, crises became cyclical. The ledger kept growing, quietly, predictably. Fallout. Who really owns who? Now we arrive at the uncomfortable part. Governments owe money, but to whom? Not to a single shadowy figure. Not to one secret organization, They owe it to a system, a network of institutions whose assets depend on sovereign debt continuing to exist, pension funds, insurance companies, banks, central banks, markets. If large debts were erased, trillions in safe assets would vanish. The system isn't designed to collect all debts. It's designed to roll them forward forever. This is why national debt rarely shrinks in real terms. It's refinanced, restructured, extended. The ledger never closes. Failed fixes. Why nothing ever changes over the decades? Leaders have tried fixes: austerity, stimulus, debt ceilings, balanced budget promises. Each one fails for the same reason. They treat debt like a problem, not like the foundation of the system. Austerity shrinks economies, making debt ratios worse. Stimulus increases debt, delaying collapse. Monetary easing inflates asset prices, widening inequality. The fixes don't fix, they stabilize. Because instability would reveal the truth too clearly. Modern parallels, the pattern repeats. Look at today. Global debt has surpassed levels once considered unimaginable. Entire generations are born into economies already leveraged decades into the future. Crises no longer shock anyone, they arrive on schedule. When something breaks, banks, markets, governments, the response is always the same. More liquidity, more borrowing, more future obligations. The invisible ledger absorbs the shock. And here's the most unsettling pattern. Every major reset increases central control, reduces public understanding, and makes the system more abstract. Money becomes numbers, debt becomes policy. Reality becomes optional.
The real revelation, what the ledger really does. The invisible ledger doesn't exist to punish nations. It exists to discipline them. Countries that comply get access to credit. Countries that resist face capital flight, currency collapse, or isolation. Debt becomes leverage. Leverage becomes power, and power rarely announces itself. 3 takeaways. First, national debt is not meant to be repaid. It is meant to be maintained. The system functions only as long as obligations continue indefinitely. Second, money is no longer a neutral tool. It is a governance mechanism who controls credit, controls outcomes. Third, crises are not anomalies. They are pressure valves. Each one resets expectations without resetting the ledger. A warning and an open thought. The danger isn't that debt will suddenly collapse the system. The danger is that people will stop questioning a system that depends on permanent obligation. Because once debt becomes invisible, consent becomes assumed. And when no one knows who is owed, no one knows who holds the power. Call to action. If this changed how you see money, debt, or governments, stay here. Subscribe. Subscribe. Because the next question isn't who owes. It's what happens when belief in the ledger finally breaks. And that's a story most systems are not prepared to survive.